Thank you all. It's a pleasure to be down here today. When I got asked to speak at this event around the future of the Peel region, it really crystallised in my head and has been reinforced in every part of the state that we are really craving and looking for a better perspective on what the future is for Western Australia as a whole, and also right across the regions. And a lot of that comes through because of the economy changing shape. We've certainly going through a transitioning period as the resources investment boom phase of fades, and we move into that production phase, particularly in those in the iron ore sector and with the oil and gas developments to the north of the state. But it has been a golden period in the state's history, and the Peel region has been one of those great beneficiaries. We've seen an economy overall double in size in Western Australia, and in the Peel region it's tripled. We've seen 400,000 jobs created. We've seen the population swell by around 600,000, and a lot of those trends have been mirrored in this fast-growing region of Western Australia, which has been growing at a faster clip than the Perth metropolitan area and has only been second to the Pilbara region in terms of the rates of economic growth. So it has been a sector, a region that has prospered through the last decade, but like the state as a whole, it's also facing similar challenges now as the economy changes shape. So what we see now is an economy that is transitioning, and there are a few speed bumps that we're observing. We've seen confidence really plummet to low levels. We've seen overall levels of activity decline, largely on the back of declining mining investment. But a lot of it's around, and a lot of concern around what the future pathway of growth is for right across the state. If we take a look at where we are now, though, and look at that major driver of growth in this state over the last decade, and it has been business investment, and primarily investment from the resources sector. Since the GFC, we went through this rapid phase of investment. A lot of that was built off the back of expansions in the iron ore sector, but also those new major LNG projects that were moving into a construction phase. It has seen overall business investment quadruple in size over the course of the decade in terms of overall levels of activity on a quarter-by-quarter basis. But over the last 5 quarters, we have seen those levels of activity start to come off, and they are now over 21% lower than what we saw at the peak, which was about back towards the end of 2012. So that's certainly a negative in terms of overall levels of activity in the state, and that has seen the domestic economy overall actually decline in real terms for 4 consecutive quarters. That would suggest, if an economist was to be narrowly focused on the domestic economy alone and not take into consideration our exports, that the economy was in recession, but certainly the broader fundamentals don't support that. And certainly when you look at what that next phase of the resources investment boom is, which is in relation to production, we are seeing that transformation progressively occur, and exports have really picked up over the last 5 years, just quietly. A 50% increase, or a $50 billion increase in exports in 5 years is significant by any measure, particularly with, given that exports represent around 50% of our economy. So that does have a significant positive effect on the state as a whole. Driving that, not surprisingly, has been China. What has been surprising to me when we've dug into the numbers a bit further was that of that $50 billion increase, $49 billion of that increase has been directed towards China. So it does really paint a picture as to how important China has become to the state's economic story in recent years, and there's no doubt that importance will continue over the years to come. With that change in the shape of the state's economy, though, it has led to some changes in terms of the labour market, and labour market conditions have certainly eased. During the resources boom prior to the GFC, we saw labour scarcity at critical levels. 3/4 of businesses were reporting labour to be scarce. The unemployment rate was just a touch above 2%, and wages were growing well above the capacity of businesses, everyday businesses, to pay outside of the mining sector. The GFC provided an opportunity to reset a little bit, but before increasing again. But since that investment phase started to wind down, we have seen that labour market demand start to fall away somewhat, and we have seen overall levels of labour scarcity, according to our survey of business expectations, fall to under 10%, which means that labour is at its most abundant level, according to our members, some of which are in the audience today. It's as abundant as it has been for well over a decade, and that has followed through in terms of wage outcomes as well, where we saw overall levels of private sector wages growth rise by just over 2% over the last financial year, which was the lowest rate on record, and driving that has been lower wage outcomes in those sectors that are going through a consolidation, such as mining, construction, and manufacturing to a degree as well. So we have seen the pressure valve released a little bit from a labour market perspective, but that has come overall at a time when the broader indicators are still very robust. We had 50,000 jobs created in this state over the last 12 months. We've seen the unemployment rate stabilise at around 5%. So the key performance indicators from a labour market perspective are still broadly positive for this state. So certainly not a state that's in recession, if someone was to call it that. What the big challenge is for the state, though, at this point in time is we are going through a prolonged period of low confidence. Job security is a big factor behind consumer confidence, and with the labour market easing and the job prospects not nearly as positive as they were, say, 2 years ago, we have seen consumer confidence fall progressively and has been in negative territory over the course of this calendar year. Why is that important? Well, it does. The longer it's prolonged at low levels, the longer it does have real impacts, and that really does show in terms of retail sales figures, for example, where over the last financial year, retail sales growth was just 1.5% in this state, and that is despite a very strong population profile in this state, and it's a third of the rate of growth that we saw across the nation as a whole. So for a state that continues to grow well above the national rate, to see consumers so cautious does give you some insights into concerns that are expressed around what the future direction is for Western Australia's economy as the economy transitions. It's a similar story when it comes to business confidence as well. When we survey our members on their expectations around the economy, it has been negative now since 2012, and that's across all three time horizons. We've seen businesses on the whole be more pessimistic than optimistic around what the current conditions are, what they are over the next 3 months, and also what the expectations are over the next 12 months. And that, I guess, has had real impacts as well, to the extent that it has held back investment decisions, and it has meant that employment growth hasn't been as strong as what we would have expected at the start of the year, when we thought business confidence was about to pick up after the federal election. What's driving that? Well, one of the big factors that have been behind the decline in confidence amongst businesses and consumers has been the political environment. That uncertainty around what the operating conditions are for businesses has been a major disincentive to invest and grow because they're unsure of what the regulatory environment will be. And now that we have seen a change in government with some policies that will certainly benefit Western Australia as a whole, with the abolition of the mining and carbon taxes, then that is expected to, over the longer term, have a positive influence on overall levels of confidence. But there still remains other challenges, and concerns around the direction of the economy are paramount amongst SMEs, and certainly concerns around the cost structures in Western Australia are significant as well. We remain a high cost place to do business, and that's something that will take a long time to unwind. In terms of the Peel region, Yeah, while we certainly commend the department for the data that they do provide, because it does give you some great insights. It's not as rich as the broader data that's available on the WA economy, but certainly gives you some insight into what's happening in the Peel region. It is a region that, as I said earlier, has been growing faster than the state as a whole. It's certainly been growing second only in terms of the rate of growth to the Pilbara region, and overall now the Peel region represents about 5% of the regional economy. It follows very similar trends to the WA economy as a whole, and so when I look at the Peel region and its broad industry structure, it is very similar to WA as a whole, and that's a good thing to the extent that there is a level of diversification in the Peel region, as there is on a more macro scale in the West Australian economy. The makeup of businesses, there's around 2,500 employing businesses in the Peel region, which is a high amount. Majority SMEs, but certainly some larger businesses such as representatives on the table, which make a significant contribution to the regional economy. And that number has been relatively stable over the course of the last decade. So we are seeing a lot more scale built up into the regional economy and the businesses that operate in that, which will hopefully provide for a longer-term sustainability in that business community. In terms of population growth, that really has been probably the single biggest driver of overall growth in the Peel region over the course of the last decade. We've seen the population overall grow by 50%, which is well above what we've experienced across the WA economy as a whole. And we've seen greater employment outcomes overall as well for the Peel region. What we have seen though in terms of unemployment is that it has edged up higher than the state average over the past 12 months. But overall, a relatively positive picture from an employment perspective, and population that's expected to continue for some time to come in terms of the rates of growth that we've seen. In terms of the outlook, well, in terms of what we see for WA as a whole, we don't forecast at a regional level, but as I said, hopefully it gives you some insights into what the future holds for the Peel region. But we expect growth rates to average around 4% per annum over the next 2 years. It's certainly not it's not going to create headlines amongst the media community, but it is a set of numbers that's is significantly positive in the context of an economy in transition, and what that's based on is really an economy that is diversifying over time, and that transition away from investment to production is going as seamlessly as possible, considering what the WA economy used to be, and in terms of a boom-bust cycle. Longer term, I think the vision for the state that we see and that we've articulated most recently in August when we've launched the State of the Future document is we see a state that has a significant opportunities on the horizon, building off our comparative advantages in resources, in education, in niche manufacturing, there are, and in other services sectors as well. We are a state that does punch above its weight in many sectors, and we expect that to continue over time. What we'd like to see more of in terms of realising that vision is some real reform start to come out of the federal and state governments to improve that business environment and allow businesses to take advantages of those opportunities that exist on the horizon. And as is hopefully shown on this chart here, is from a competitiveness standpoint, there is a lot that we need to do to improve in many areas, but primarily in terms of regulation and red tape, where we're in third world country territory. Industrial relations, similarly, very inflexible compared to modern economies, and also the taxation environment isn't conducive to innovation and growth either. And some of these issues really have come out in a number of reviews that the government started to commission at a state and federal level. And I've noticed Sue in the audience today who's been one of the leaders behind the competition policy review, and that hopefully we'll see some real outcomes come out of that. What we hope to achieve, if we do see some movement in these areas, there is there's great opportunity on the horizon. You know, we could be a state that has an extra 1 million residents, and for a region like the Peel, it could increase its population by a further 80,000 over the next 20 years, and that will have significant benefits. We'll see the region of the Peel potentially triple in size again and become a $34 billion economy rather than an $11 billion economy because of what opportunities could be realised through these pro-market reforms that we're continuing to push. I'll leave my presentation on that. I'm happy to take questions afterwards, but I hope that was of some interest, and I look forward to the discussion later. Thank you.